Good morning. For Traders Exclusive, this is George Kachuk, RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. What I'd like to do is talk about the state of the equity markets. And the equity markets, basically, they're still rallying and the trend is up. However, one needs to be patient here and realize that in a short-term situation, we may be overbought, meaning most of the leading issues like that we see in the financials are extended way beyond even their 10-day moving average. So that's a little bit unusual. So it's the kind of market you don't want to chase. You do want to stay long, but you want to be patient and wait for the pullbacks before you initiate any new positions. Now, as this rally continues, I want to talk about some of the levels that you might want to look at that may tell you that perhaps this rally is negated looking forward. So on the S&P 500, we're looking to see that it stays well above that 2120 level, and it's well above that now, right around the 2200 level. But if it starts crashing below the 2120, which was like the Brexit breakout level, that may tell us that the uptrend is coming to an end. Similarly, if we look at the NASDAQ, we're looking at the levels between 5170 to 5140. That corresponds pretty much with the 200-day moving average and that 5040. And if it falls below there, that also may tell us something. Looking at the Dow Jones Industrials, if it drops below 18,000, that may tell us that, again, something's going wrong. Looking at the transports, if the transports drop below 8,200, that's the breakout level. It's well above that now, but if it were to retrace down below that, that will tell us the market's in trouble. If we look at the Russell 2000, we're looking somewhere between the 1260 to the 1200 level. That represents the 50 and 200-day moving average. If it were to fall below those, that will tell us that this uptrend is ending. But for now, the rally continues, and it continues to be led by the financials. But like I said, they're extended. The industrials, a lot of industrial stocks, the steel stocks are extended. Materials are also extended right now, consumer discretionary, and technology is improving. So that's one area you might want to take a look at. Also, one area where we're seeing a lot of stocks ready to pivot points is in the energy. You can look at the energy ETF, the XLE, and take a look at that. Right now, the utilities are lagging, as are the consumer staples, as are healthcare stocks. In healthcare, some of the biotechs may still offer compelling values, but says that whole sector is a little bit underwater, so you might want to see it improve a little before you start looking at any plays there. So of course, none of these are any recommendations. You need to consult your financial advisor to see if any of these trades are for you. So in summary, be a little patient, wait for the pullbacks before you start putting on any new positions. And as always, let price and volume be your guide. This is George Kachuk, with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great trading week.